Hi friends, Simit here from InformedTrades.com. Today is Tuesday, September 2nd, 2014. Time for our daily Forex chart review. In these sessions each day, I share the trades I'm placing, adjustments to existing positions that I have on in the markets. These are real trades placed on a live account. You can see my entire trading history on InformedTrades.com, and you can see all the trades are verified by myfxbook.com, a trade verification service. If any information I'm presenting to you is unfamiliar to you, check out InformedTrades. We have a huge archive of learning material covering many styles, many markets, including methods that I'm not using or styles that aren't covered in this video. Check it out, share your knowledge, ask questions. We can all learn together. Let's get started with a look at the charts. One of the biggest stories today is gold. So gold broke below major support here at 1270 and 1280. So before the big red candle, you can see that here today. Let me extend the rectangle a bit. We are now below support at 1280 and below support at 1270. So this is pretty ominous for the bulls, at least in the near term. It suggests a move back to retesting 1240. So I was sort of, as I had mentioned in previous videos, I thought there was a chance that the low would have been in July. A lot of traders had that perspective, or a lot of people watching cycles. That was a common perspective amongst those who really emphasize or value cycle analysis. That clearly has not occurred. We are at a point that is lower than the lows we saw in July. So 1240 is a major level to watch. If we look out to the monthly chart, still have 1180 as the truly big support. And let's actually zoom in a little bit here on the monthly chart. We got but we're still sort of in this rectangle and in this, more importantly, within the converging triangles. So we have a symmetrical triangle here and coming up from the bottom. So we're still near the bottom of that trend line. You can see a little more. Let's take a look at it from the daily chart perspective. Oh, well, actually on the daily chart, it looks like we've broken through it. On the monthly chart, we're still sort of, it doesn't look like we've broken through it by much, at least from the perspective of the monthly chart. So still roughly in that range from a longer term perspective, but definitely near term, I think the momentum is now in place for a retest of 1240. That's the next major support level. So that's gold. Bitcoin, it continues to find support at around this level. Let's zoom out a little bit. There we go. So support at 470 basically. The market has found that here based on these long wicks. That was August 19th, 18th, 19th, a couple weeks ago. It's now seemed to be finding them again. Finding resistance at 522. It was unable to break that recently. So that's something to consider. Like I mentioned, if we can get back up to 550, I think that's a great level to short from. Personally, I got long at like 526. I'm holding it. I have a binary outlook. I'm holding it for the long term. Either gets widespread adoption as some type of a payment or cost distribution technology, in which case I think the price could go up significantly, tenfold, or it becomes useless and it goes to zero. That's sort of my take on it. But at least from a technical perspective, for those who wish to trade it, resistance at 522. If it gets back up to here, I think there's a really great opportunity short if it can touch its 50 simple and 200 exponential moving average. We are seeing some support at 470. Okay, now on to the Forex trades. Before we get on to the Forex trades that I have on at the moment, actually let's get to the Forex trades that I have on at the moment. I'll discuss some other things that happen in the Forex market that I think are pretty interesting. Okay, but first up is the chart we're looking at now, Euro QE. So pretty big rally. This trade has been de-risked. I have my stop to break even. We do have a bullish engulfing candlestick pattern here. So that's not so good for my short trade here, because we have a bullish engulfing candlestick off the 50 simple moving average. So those are two strong signs that bulls are stepping in. And part of me is tempted to take profit now, although as I mentioned in numerous videos before, I don't like to tinker with trades too much once they're on. The main form of tinkering I do like is to move my stop to break even when I think a trade it's time to de-risk the trade. I don't like to do much more than that. So even though this bullish engulfing as a refresher is when one candlestick totally encompasses or engulfs the previous candlestick and is an up day. If it were a down day and it engulfs, it's called a bearish engulfing. But here it's a candles up day, meaning the close is higher than the open, and its entire range engulfs or is larger than the entire range of the preceding candle. So that's a pretty bullish sign, and it's happening at the 50 simple moving average, which is also bullish. So that's not so good for my short Euro QE trade. But as I mentioned, the trade has been de-risked, meaning my stop is at break even. So even if price comes all the way back up to 58.21, it'll take me out. I'll be out of the trade. I won't have lost any money. Of course, I won't have gained any money either. Okay, that's Euro QE. QE yen. That continues to move higher. So in both instances, I'm long the QE, long New Zealand dollar. It did not rally, or it went down against the euro, but it did go up against the yen. So that's nice to see. It will have to clear the 50 simple moving average, which is a major barrier coming up. But one thing that sort of relates to this is just a price action on the yen. And if you look at dollar yen, I mean, that is huge. So we have, a couple big days right here, especially today, at 105. And really, since August 20th, it's been on quite a run here. It's gone from 102 to 105 in, what's that, less than 2 weeks. So 300 pips in less than 2 weeks. Pretty solid move. But, there's the concern about the yen of eventually everyone's going to dump the thing because there's no way the Bank of Japan can pay. I mean, the economy is just drowning in debt. It has the largest debt problem of any developed economy, and at some point, people are just going to run away from the yen out of concern as to what's going to happen, and fear that the only real way out for the Bank of Japan is just to monetize the debt. Meanwhile, they still need foreigners to buy things. They're running a trade deficit and a budget deficit. So the government continues to spend more than it's taken through tax revenue, and they need to import more. Now that may change once Japan starts its nuclear reactors, because most of what they're importing is energy. So once they can start their nuclear reactors, that will decrease their energy imports. But at least for now, they're running twin deficits, and they have a huge amount of outstanding debt. So there's a lot of concern with the yen as to how they're going to pay off this massive amount of debt, and if it's just going to run into everyone selling, all external holders of the yen selling it, as well as the Japanese government or the Bank of Japan continue to print more yen. So there's some concerns there. We have, if you go to InformedTrades.com/Japan, we have a huge section on the guide to the Japanese debt crisis. But numerous people, myself included, expect a breakdown in the yen. Kyle Bass has said dollar yen is going to 360. He said 115 by the end of this year. So that's going to be some pretty quick moves if that is to occur. But this may be it. Over the past couple weeks, we are seeing a breakdown a bit in the yen. Okay, so anyway, how that relates to me is, or the trades that I have on, is I'm long Kiwi yen, which hasn't performed as well as dollar yen, but still are getting some rallies in it. And the next major event for Kiwi yen is to break above the 50 simple moving average at 87.73. Okay, and the last trade I have on is dollar Canada. This rallied, so that's good to see. I saw this long look off support, was very interested in it, and it's been rallying since. That's so far so good. Let me add actually a break-even point here. Oh, I can actually, I don't know, I can just move this one. And here is a resistance level. So once price can clear, and we're almost there yet now, once price can clear 09.15, I'll move my stop from down here to break even. So pretty close, and that resistance level is based on this here. I like to see price move to the first resistance level, and I probably should move it up a little more right there. The first resistance level that price clears, because the idea is that once it clears this level, closes at or above, that level will become a support level. And so it will be difficult for price to move below it, and thus I can move my stop up to break even. I'll still hold on to the trade, but then if it comes back down to 08.46, I'll be stopped out. Won't have lost any money, won't have made any money either, but won't have lost any money. And that is about it for my trading today. No new orders placed. I just have my Euro Kiwi, Kiwi Yen, and Dollar Canada trades on. Euro Kiwi and Kiwi Yen have been de-risked. My stop is at break even. Dollar Canada, not there yet. I still have risk exposure on that trade. Any questions you have, anything you want to add, join us at InformedTrades.com. Best of luck in your trading, and we'll see you tomorrow. Take care.